Hey, what's going on, everyone? It's Tim here with the TMA Connection. It's a podcast that is focusing on people that are difference makers in real estate and other things too. And today we have a very special guest, Miss Kristin Woods from upstairs, all the way upstairs in our headquarters here at Cummings and Company on Fulford Avenue. We have Miss Kristin Woods with PRMI. Welcome to the show.
Thank you. So I have to ask, are all your customers a very special customer?
Well, I just don't say that to anybody. Good one. It's a 10. So thank you so much for coming down today. Really appreciate it. We've been trying to put this together for a while, and finally we got Miss Woods in the studio to just talk some real estate, and then also kind of dig into a little bit of reverse mortgages.
Yes.
A couple podcasts ago, we were interviewing Brightview, and kind of have this there's a lot of baby boomers out there right now, and people that could potentially need some of this education. It's almost like a series right now,
Yes.
the Brightview experience and senior living, but then there's also an opportunity to use something called a reverse mortgage, and to help people that are older with buying a house or refinancing. And we're going to talk all about that today as well.
Absolutely.
But before we do that, let's give everybody a little bit of an idea about who Kristin Woods is.
Okay. Well, I am a wife and a mother, and I am, like I said, I'm married. I have three adult children because I have my 2 children plus my son-in-law that I like to include as my third child.
Oh, I thought you were including your husband.
Some days.
Some days.
Trying to get stuff done when we've got the honey-do list and you're trying to lead through the the schedule.
Yeah, my wife has the same issues.
I think we all do. Anyway, I have 3 adult children, and I have a grandson now who just turned 1.
Oh, congratulations.
Thanks. And he is, do you have any grandchildren yet?
No. And I have 3 daughters.
Okay.
So I didn't get that rambunctious, typical boy maybe that you were about to say is a lot of energy or
so different.
Oh, really?
I had 2 girls.
Okay.
Similar to you. I had 2 girls. Actually, I think you had them both at Bel Air High School years ago.
Okay. Yeah.
At different times, but I had 2 girls, so they're quiet. It's definitely different raising girls than what I see raising boys.
Okay.
So my grandson is definitely rambunctious, and he's not so snuggly. Like I'm like, come on over and let's and he's like,
Gotta keep moving. Gotta keep moving.
He does. He's constantly moving, constantly in things, but he is so precious.
Aww.
And I love spoiling him. So, everybody says it's so great to be a grandparent because, you're not responsible for raising them. You just get to spoil them and just enjoy them. And
Yeah.
I absolutely think that's true. I really
I hear there's nothing better than being a grandparent.
It's
awesome. It's a magical time of life is what I've heard.
It is.
Yeah.
And they're staying with us right now because my son-in-law started his own business. So they're all trying, they're trying to save money and before they get a house and, that helps the business as well and takes pressure off of them. So they're staying with us, and he is, so I get to spend a lot of time with him. So I really think, I'm hoping that that's going to be a really good bond between us that will never go away.
Yeah, that's so cool.
I think that's really cool.
Awesome. Well, I want to start off with probably one of the biggest questions that everybody asks is what's going on in the market? And certainly, you have a mortgage lender here that we're interviewing, and then you have me as a real estate agent. So I kind of just want to have a little bit of a dialogue about what is going on in the market right now, because it's a weird time.
It is a weird time. It's volatile, and I'm sure all of your listeners know. You're listening to the news every day, and there are different sides and different opinions, and they're all fighting for opinion all the time, and I think it's been a scary time for a lot of people because nobody knows. You can't plan around this,
right?
Nobody for sure. Nobody has the crystal ball to know what's going to happen in the future.
Sure.
But I also think what I'm seeing this year, this spring, and I know spring kind of brings people out, starting to look again, but I feel like I'm seeing and hearing from people they're sick and tired of it. Right. So, yes, prices have gone up, but people are adjusting, and people still want to move. They need to sell their homes or they need to find a home.
Mm-hmm.
And I kind of see more activity recently where people are like, you know what, I'm going out anyway.
Okay.
To look. I mean, are you seeing that too somewhat? Are you seeing a little increase?
Yeah. So we had an open house this past weekend up in Aberdeen, and we had 14 groups come through over 2 days, which is a pretty successful open house. There's a lot of people looking. Off of that house, we had 3 offers. So if you compare that to 2021, where you had like 18 offers, certainly it's less, but it's, and both offers, all 3 offers, 2 of them were asking for seller concessions, for the seller to help with their closing costs, where we weren't seeing that before.
Okay.
So I think, even though the interest rates have gone up, it has kind of decreased the intensity of how fast everything was going. But then, I have a condo listing right now that's a 55 plus community, and it's not moving, and the comps support the purchase price. It's not like we're ridiculously overpriced. Right. But then I've seen other houses where there were, a couple multiple offers. So it's a very weird time.
It is.
With, just trying to figure everything out.
It seems like some stops and starts
Yeah.
This year. But, I think people are also realizing home prices are going up. They're not going to come down, right? I mean, homes throughout history, they have continued to appreciate.
Right.
On an average.
Even when the market crashed in 2012, we've rebounded from that plus some.
And then some. Right.
And then some.
So if you need a home, want a home, now's as good a time as any, right?
Yeah.
So the interest rates are going to go up and they're going to come down and they're going to go up and they're going to come down.
Yeah.
And that's just what interest rates do. Always.
Yeah.
And so right now it feels a little more volatile, but if you find a house you like, you're going to pay more tomorrow than you would today. So to me, jump, and then you can hope to refinance later when the rates drop again.
Right.
So
because as history tells us, they do go up and they do go down.
Yes.
They do go up and they do go down, and who knows when that is. But the biggest point that I've been trying to communicate to people is you have to be able to afford the monthly mortgage payment.
Right.
Don't live beyond your means. And if that's something where you can't do it, then maybe it's not a good time to buy a house.
Right.
Right. But don't let the news scare you. I think the way things are presented on the news, on social media, it's all about trying to get more views. It's all about the clickbaitiness of it, if that's even a word, clickbaitiness.
I think you just made it.
I think I just made it one, yeah. But naturally, I mean, in a way, we put out content and we want to try to get it to as many people as possible.
Right.
But the way the news portrays what's really going on in the world is sometimes construed to get more hits, more views, more clicks, more attention. We're attention seeking when we're marketing out there.
I agree, and I think it's you have to use your own judgment, and you have to kind of temper things. Take everything with a grain of salt, because it's probably not as great as you think it is out there, and it's not as bad as you think it is out there.
That's beautiful. It's always in the middle. We are in a society where there's so much extremes. You're either this far this way or this far that way, but really the truth probably lies somewhere there in the middle.
Absolutely. I agree.
Interest rates, as of May, we're on May 2nd today, so of course we have to put that timestamp on here because, again, it's volatile. Things could change. If we're looking at interest rates today, where are we looking at for conventional FHA, VA?
We're in the sixes. I mean,
okay.
And obviously it depends on what your credit is and how much you're borrowing and things like that. But I think we're in the sixes. And a couple weeks ago they were going up, and now they've come
down.
They'll come down a little bit, and they'll go back and forth, and that's just going to continue to be.
Yeah.
So.
Yeah, I wonder, and you're not a political expert. I'm not a political expert, and we're definitely not taking sides here on anything. Speaking strictly
in the middle.
In the middle. How much of the tariffs that we're seeing in the news right now, how is that affecting the real estate industry? I don't know the answer to that question.
I don't either. I think that's
That's
going to be more of a backward-looking thing, don't you think?
Probably to connect the dots looking back.
Yeah.
Yeah, it's too new.
Yeah, it is, and it goes back to what we were saying in the beginning of the conversation, that everything is volatile right now, and I think people are they're tired of it. So you're like, I just have to do my thing and live my life, and we'll figure out how it hits us. I mean, you can't stop living because of everything that we're hearing in the news. You just can't.
You can't.
Life goes on.
Yep. And for the most part, it's your decision every day to wake up and determine whether you're living in a calm or a hostile environment.
Very true.
And of course there are things that affect other people, affect people more than it affects us and stuff like that. We're not going to go all down that rabbit hole, but
that's another podcast.
That's another podcast. Kristen's coming back to talk down and dirty about all the negative things in this world.
And the positive ones.
And the positive ones.
And how we handle them.
So before we go on to reverse mortgages, I would ask, are there any predictions that not Kristin Woods, but maybe the industry is predicting over the course of, say, the next 12 months? Or is it just that volatile that I won't hold it against you if we get like 10 months and you're completely wrong?
Thank you. I appreciate that.
No problem.
I'm not going to get fired.
You're not going to get fired.
Boss.
Yeah, no. This is just a prediction. And then, what are the professionals saying? Or what does Kristin Woods think? It's okay to have an opinion.
That we're poised for great things.
I love it.
I
love that.
We are. We're getting our ducks in a row. Things will get better. Things will improve. The volatility is not going to stay around forever.
Yeah.
Things will settle. We just need some of those answers, and then the market
people will make some moves.
74%
of people that have a mortgage right now have an interest rate that's 5% or less.
I know. It's just why it's been so slow for people to put their homes on the market.
Exactly. Which increases the demand because there's not as much inventory out there. We have a low inventory issue. And so certainly I think maybe with new construction and materials and stuff like that, the tariffs could probably play a role in where we're importing those things from.
Right.
Possibly, So it's all interesting. It's fascinating to me,
But if we get down into the fives and we're in the low sixes and the fives again, if you think back to probably like 80s, 90s, interest rates were in the teens.
Yeah.
We will probably never see that again in our lifetime.
Right. Let's hope not.
And then in the last, 5 to 7 years, we've seen interest rates near zero. We'll probably never see that again in our lifetime.
Right.
So we're really kind of coming back to what has been the norm.
Yeah.
So.
And just unfortunately, the home values have just dramatically increased so much over the past 5 years.
Yes, they have.
That what used to be a normal interest rate now creates a bigger monthly payment for the mortgage. So again, it comes back to that monthly payment. Hey,
what can you afford?
What can you afford? What can you live with comfortably for now?
Right.
And then when the rates do go down, is your opportunity to refinance to get a lower mortgage payment. And
that's often the conversation that I have with customers when they call and they need to get a loan or they want to get pre-qualified. It's like, okay, often they don't even know where they want to be.
Yeah.
So you can kind of back into that and figure out, what is it that you can comfortably afford? Obviously the numbers can guide that as well.
Yeah.
When you're having all those conversations, but people I think generally know what they can do and what they can't do, and that's probably it's a good starting point for a conversation. Yeah, definitely. And to keep the emotion out of all of it and the drama of the world, and look at the numbers. Yes.
Because numbers don't lie.
Nope, they don't.
So, cool, awesome. All right, well, I just wanted to get the Kristin Woods market update from PRMI, sponsored by the Markland Advantage of Cummings & Company Realtors. All right, let's talk about reverse mortgages. A lot of people have heard of the term, don't really know too much about it. Maybe they have some misconceptions about it. So what exactly is a reverse mortgage?
It is a type of loan, just like other loans out there, that allows you, the homeowner, to access the equity in your home If you're ages 62 and above, I have to qualify
Yep.
that.
Okay.
That allows you to access the equity in your home without having to sell your home and without having to make a monthly payment. And it creates a loan that would have to be repaid at the time you either sell the house, leave the home, or pass away.
Okay. That's pretty basic, right?
Pretty basic.
But we talked about who qualifies, and so it is 62 or older.
Yes.
Right.
Yep.
Any other qualifications needed for that?
Yep. You got to be 62 or older. You need probably about a minimum of 50% equity in your home.
Okay.
To qualify for that. The home must be your primary residence, and FHA has certain requirements for the home, usually around safety issues and things like that for the home.
Handrails and
Absolutely.
Yep.
And then there's a financial assessment that is done that looks at your credit and your income, just to make sure that you are going to be capable of paying the taxes, paying the homeowner's insurance, and continuing to maintain that home.
Okay. So, in essence, if I got a reverse mortgage and I was over 62 and all that, I wouldn't have a mortgage payment.
Correct.
But I would still need to pay my taxes and insurance.
Yes, you would be required. That is the main requirement, that you have to pay your taxes, you have to pay your insurance, and
HOA, all that stuff.
Yep.
Okay.
All of those basics on your home, and you have to continue to maintain the home.
Okay. So properties that are eligible would need to be ones that are pretty well maintained, not distressed properties, stuff like that.
So I've done reverse mortgages where there are problems with the home, and so they'll go out and they'll do an appraisal on the property, and then that appraisal will say this needs to be repaired, similar to other, you get an appraisal on a property you're going to purchase, and FHA will say, this has to be fixed, that has to be changed, and usually the homeowners are very accommodating in that. I've never had somebody who couldn't fix what needed to be repaired on their home.
Okay. How's the reverse mortgage specifically differ from a traditional mortgage?
So again, with a reverse mortgage, the lender's going to pay you instead of you paying the lender. So, and the loan would be repaid at the time, again, that you sell, that you leave the home, or that you pass away. With a traditional mortgage, you're taking a loan on your property with interest, and you're making a monthly payment on that until that loan is paid off. In the reverse mortgage, it's creating a loan because you are using that equity, and that equity there's interest attached to that. So that grows, and the equity decreases over time as the loan grows. And then like a home equity loan is you are able to access the equity in your home as a lump sum, and you get a monthly payment to pay that loan back as well to the lender.
Interesting. In the past, reverse mortgages might have had a bad name or some misconceptions. Like, what are people's hesitations about getting a reverse mortgage?
I think the number one thing I hear is that they don't own their home anymore. And which is totally incorrect. You own your home. You have the title to your home, as long as you're paying your taxes, and just with our regular mortgages as well. As long as you're paying your taxes, as long as you're paying your insurance, as long as you're maintaining your home, that home is yours. You maintain the title to your home, and you are able to pass that on to your heirs, just like you would pass other things on to your heirs. So that seems to be the number one misconception that I run into. Another misconception is that these are really only for people in distress. I've had folks that have done reverse mortgages because, honestly, you're 62 or older, and you're sitting on all this equity. Maybe you've paid off your home. Maybe you're only 50% paid off to your home. But regardless, you're able to access that equity. It makes your life more comfortable. You can go on that vacation, or maybe you want money sitting on the side to pay for the things that come up that you want to take care of. It doesn't have to be that you're in distress. It's there to make your life comfortable. It's your equity. Or
take that equity and invest it in other areas.
Yep, I was going to say I had one that did exactly that. They said I want to use this and invest this money, and you can do that. You can buy a home you can buy another home. I've done reverse mortgage for purchase. I've done the reverse mortgage for investing. So there are different ways you can use that.
That's interesting. So what happens then when the homeowner either passes away or they want to sell the house? Is there any kind of financial struggle that either they or their family are going to be in? No.
So if you've left the house for more than 12 months, that loan will come due. If you choose to sell the house, the loan will come due. If you pass away, your heirs that loan would come due as well.
Okay.
And at that point, you can refinance the loan because now it's a loan, right? Or it's a loan that has to be paid back to the bank as it was. You could sell the home and then just pay off the loan and take the difference. Or if you have other funds or other ways to pay that loan, you can do that as well.
The longer you live in the home, is that the more that you would have to pay back to the bank?
Yes.
Okay.
It would be because you're using that equity over a longer period of time. Interest is accumulating on the amount of equity that you're using.
Okay.
And that continues to accumulate throughout that time that you have that. So the longer that sits there, the more that loan is going to grow, the lower the equity is on that home.
Okay. And again, everybody thinks that I'm waiting for the market to crash. But let's say home values do go down at some point significantly. But then you have this amount that's more than what the home is worth. Are we going to come into any? Yeah, are we going to come into any obstacles there?
No, and that's a good point because it's another thing that people do worry about with reverse loans. These are called no recourse loans. So you cannot owe more than the value of that property when it is sold. So a lot of this stuff's done with banks and actuarial tables. They figure out, here's your age, here's how long we expect you to live. They have all this stuff figured out, and that protects them.
Protects their risk.
It protects their risk, and so does the mortgage insurance that goes along with that. But say you far exceed what they expected, that's going to be on them, unfortunately, for the banks, which is again why
so the
they
families
have
the
family's off the hook.
Family's off the hook.
The family's off the hook. So they could sell that property and say, okay, here's what I got for the property. That's paid, and walk away from it.
Have people ever sold their property and then used whatever proceeds or equity to purchase a senior living type situation? Like they had a reverse mortgage, but then maybe they had to go to assisted living or senior care. Have you ever had that situation before? Or?
I personally have not, but it kind of goes back to when you sell the home, when you leave the home, or when you pass away, so that loan would come due. So if they had a reverse mortgage, they can sell the home, like you said, and then take the difference in the proceeds and then take that to senior living. Okay.
So what are the biggest risks or downsides that homeowners might face, that they should maybe be aware of?
You have decreasing equity while and increasing interest, as the interest is accruing on that loan. So so you have that growing loan over time.
Yeah.
The high costs, there are origination fees.
Okay.
There are closing costs. There's mortgage insurance premium that gets paid as part of that loan process. And as you know, we have fees and costs and whatever in any mortgage, but they're a little bit higher with the reverse mortgage because of the risk, I guess, to the bank or the lenders in the long run.
Yep.
Interest accrual, like I said, your balance increases, the equity goes down. Inheritance impact, these are conversations to have with your family, because you're going to say to your kids, you know what, maybe I'm not leaving you the house, or maybe the house is not going to be worth as much when I go because I'm going to, because I have this loan. So, that definitely impacts that. Non-borrowing spouse can be impacted if the borrowing spouse passes away first. But then again, these are conversations to have when you're entering this loan process, because there are protections for the non-borrowing spouse as well.
Gotcha.
HUD, has protections for all of that, for everybody involved. So that's kind of a separate conversation. And then just failure to pay, if you don't pay your property taxes, if you don't pay your insurance, if you don't keep up the home, they can come after you for that. You
Gotcha.
could be evicted from your home.
Gotcha. So you would assume then that like when you're speaking to customers about this product, that you're not only talking to the people that are using the money, but maybe you're bringing in the family too.
Absolutely.
With this.
So, which kind of goes into how do I have a conversation with folks about a reverse mortgage? So I read one time that these, reverse mortgages can take longer than traditional mortgages just because they're different. And we're dealing with older people as well, and they need to feel comfortable with it. So for me, I like to, and often families are involved in this process.
Good.
Whereas with a traditional mortgage, they would not be
right
necessarily. But families want to know what's going on, and I'm always happy to have that conversation with them. I'll sit down with them, and what are their goals? Similar to regular mortgages, and
sure.
What do they think what are they trying to accomplish, and then how is this going to affect them, and is this the best product for them? Because my job as a loan officer is to make sure I put you in the best loan for your needs. So if it's the reverse mortgage, that's great, but sometimes we might look at other options too and say, hey, you're looking at a reverse mortgage, maybe a refinance makes more sense for you, maybe this does. At the end of the day, this is their call, not mine, but I would provide them with all the options available to them so that they can make the best decision. And then the families are always, of course, concerned. They're concerned about usually mom and dad.
Yeah, I mean, they're trying to look out for their parents for sure,
Right, and, are mom and dad making the right decision moving forward in a reverse mortgage? And, so it involves a lot of people, a lot of conversations, just making people feel comfortable with the process.
Yeah.
Okay, so I made the comment that if you don't pay your taxes, if you don't pay your insurance, if you don't do your upkeep, you can that could affect you being able to stay in the home.
Right.
This is the same for regular mortgages.
Sure.
Right.
Right.
That protects the lender.
If you pay, you stay. If you don't, you won't. Right.
So these are fairly normal things. I mentioned the non-borrowing spouse. If a borrower passes away, and a non-borrowing spouse may be able to remain in the home, and they just have to meet certain eligibility requirements again through HUD. So it's not that, they're going to get kicked out of the home tomorrow.
Gotcha.
All these things take time, and there are usually solutions around them, because at the end of the day, this is a very protected product, just like our other loan products are. And HUD wants to make sure that the customer is taken care of and that they're not losing their home, that, everything's done the way it's supposed to be done.
Yeah, exactly. Yeah. If people wanted to ask more questions, and of course, when we talk about these things, it's got to be more general, because everybody's situation is an individual situation.
Absolutely. Everyone is different.
Yeah, exactly. So if people wanted to connect with you about reverse mortgages as possibly being an option, how can people reach out to you?
So my number is 410-804-6914. And again, I am with Primary Residential Mortgage, so you can certainly find that everywhere.
Yeah,
on social media, or look them up. Look them up in the book. Yeah. Old fashioned.
Is there still a Yellow Pages?
Internet.
Google, I think it's what they use now these days, Kristin.
That's true.
Yeah, that's true. Awesome. Of all the people that you've worked with, especially with reverse mortgages, is there a rewarding time for you, like a specific story that you can share without using names or anything like that's really kind of touched you or made a difference in your life?
Absolutely. I got into reverse mortgages because for me, I've always had an affinity for working with older people in any capacity throughout my life. And I ended up getting certified to do reverse mortgages because this gave me an in, or an ability to work with folks and help them. And I enjoy talking to them, hearing their stories, and helping them find a solution for whatever their need is, whether it's that they want to do some investing, whether they want to be able to stay in their home longer but they're on a fixed income, whether they might need some extra help. And I did one for someone not long ago who, I worked with the family, and they were concerned that their parent wanted to stay in the home and remain independent, but was going to need a little extra help and is on a fixed income. So this allows them to help pay for that help so that they can stay independent as long as possible, stay in their home and not have to leave.
Yeah.
So it helps those folks that I enjoy working with, and it also helps the families that are supporting them. So I think it's a great product for the right person in the right circumstances. So I'm happy to help anybody get there, and that's a huge success for me.
Yeah. So if you guys want more information about reverse mortgages, please reach out to Kristin. Any person that I bring on the show is somebody that I know, I like, and I trust. And, to acknowledge you, I mean, you're just truly genuine, and you are looking out for people's best interests. And we've done a deal together before, and it was super smooth. And so, I thank you for coming down today. And again, we'll pop your contact information up on the screen there. But this has been fun.
It has been fun. Thank you so much for having me on today. I know PRMI does podcasts, and maybe I'll have you down and do a podcast with you in reverse.
Yeah, right.
Days and sponsor you.
I'm not that interesting.
You are.
I am not that interesting.
You're out here. You're everywhere.
Yep.
I watch you. I see your podcast. You're out on social media. You're doing your
home tours.
Your home tours. All of those.
Yeah.
Yes, it's fun to watch. You're everywhere.
Well, that's all because of Drew, though.
Drew, you are the greatest.
Drew,
and
go ahead.
I'm going to have Drew on a podcast.
There
How
you
do you
go.
make your boss look good?
How do you make your boss look good? He's done it. He's been here since December, and the quality of our content and the frequency of our content has just exploded.
That's fantastic.
Awesome.
Yes.
And if you're listening to this on Spotify or Apple, you got to watch YouTube and see who we're working with here. So speaking of, if you haven't been following us yet and you just stumbling upon us, we put out a lot of great stuff. So please follow us on Apple, Spotify, anywhere you download a podcast, we will be there, as well as YouTube at the Markland Advantage, Facebook and Instagram at the Markland Advantage. We are on TikTok, which is pretty darn cool.
That is cool.
TikTok is fun. Are you on TikTok?
I am not on TikTok. I don't even have a TikTok account.
You don't have a TikTok account.
I don't.
No,
I know I probably should.
You're probably better off. But thank you so much for coming in today.
Thank you for
Great
having
information.
Me.
Very important to know, and we'll see where this market goes.
Absolutely.
Awesome.
I think it'll get better. Thank you.
Until next time, live your life to the fullest, and we'll see you soon. Take care. Did you like this episode of the TMA Connection? Well, you might want to check this one out right here. Go ahead. Click it. Go ahead.